Ladies and gentlemen, good day and welcome to the Q1 FY22 earnings conference call of Techno Electric and Engineering Company Limited, hosted by Asian Market Securities Private Limited. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amber Singhania from Asian Market Securities. Thank you, and over to you, sir.
Thank you, Stephen. Good afternoon, everyone. On behalf of Asian Market Securities, I would like to welcome everyone for 1Q FY22 earnings conference call of Techno Electric and Engineering Company Limited. We have with us today Mr. P.P. Gupta, Chairman and Managing Director, Mr. Ankit Saraiya, Director of the company, along with their management team representing the company. We shall start with the opening remarks from the management, and then we will move to the Q&A session. Over to you, sir.
Thank you very much, Amber, and good afternoon to all of you and each one of you. I welcome you to discuss our financial results for the first quarter ended 30th June 21-22. Anything said on this call which reflects our outlook for the future or that could be construed as a forward-looking statement must be reviewed in conjunction with the risks that the company or industry in which we are facing. Let me quickly highlight our performance for the Q1 financial year 22. The total revenue stands at rupees 189.45, that is around 190 crores, up by 11.5% year-on-year. And revenue from EPC is 162 crores, up by around 7.5%. Revenue from wind segment is at 27 crores compared to 18 crores, and wind has been good. It's relating. We almost produced 70 million units, and it is higher by almost 12 million units over the previous year. And revenue-wise, we are higher by almost 47%. The EBITDA for the company stands at 55 crore and compared to 44 crore last year. That is up by 45%. The operating profit for the EPC segment stood at 31.6 crore compared to 29 crore last year. That is up by around 8.5%. The other income is at 17 crore compared to 13.5 crore last year, up by 28%. Profit before tax is at 60 crores and compared to 46 crore last year. And profit after tax is at 50 crore compared to 35 crore last year, up by around 46%. The EPS is at 4.15, which is better by around 25%. The current investment value, including cash and cash equivalent, is almost around 800 crores now. During the quarter, we could receive orders for 75 crores from REC for Ladakh, and also BRL1 in other orders worth rupees 400 crores, which shall be converted into business in the coming quarter. Unexecuted order book is at 1850 crores. Outlook, we are expecting a big jump in business out of the FGD segment and data centers. The FGD segment will continue to be in focus for next 4-5 years. As per the notification of government, all coal-fired power stands to limit their sulfur emission as certified by Pollution Department in different pockets of India by December 23 and December 24 respectively. There is already considerable progress with CPSUs in ordering the projects. far implementation of these solutions, but the same are now picking up with the CVs and private sector. We expect business of around 12 billion in this year, and this level of business will continue for next 3 to 4 years, as 50 gigawatt is yet to be ordered out by the remaining SCBs, private sector, and residual sectors. In transmission sector, we expect that the status quo will continue, and it will be largely linked to evacuation of renewable power. There is an ongoing TBCB bidding for 66 gigawatt of renewable power out of the government target of 175 gigawatt for last 5 years, ending with 22, which is expected to be completed by September 21. We plan to participate in all the projects, either as a bidder, as TBCB bidder, or as a EPC, to Power Grid and other reputed developers. And we expect that we will bag business worth about 400-500 crore in this segment. The union budget has also allowed 3 lakh crore to be spent on this sector in power distribution to be released over 5 years, and the funds will be based on financial performance and viability demonstration by DISCOMs. We are yet to see any progress in this regard. We do understand that there is an amendment to Electricity Act also pending in Parliament, which may also bring distribution reforms. Otherwise, DISCOMs continue to be a drag in this business. Metering segment, on the distribution side, we see a lot of activity going forward happening in AMI solutions, and also the related power distribution networks, along with some transmission systems. They have to be integrally made more smart, intelligent, and reliable. The main aim of the government is to improve efficiency and contain losses. We had earlier also mentioned that we are already executing a 2 lakh meter project in J&K, which is on track and expected to be completed by March 22. Apart from this, we are reading in media, as I already said, that government is utilizing this opportunity post-COVID as a reforming the sector, which is overdue, and it is also being carried out in the name of Atmanirbhar Bharat, and also has been a long demand of the very stakeholders in the sector. The amendment to the Electricity Act, amendment to the tariff policy, and elimination of cross-subsidy, open access, and DBT to the power consumers. A lot of new issues are being framed as guidelines by CA, which will find place in the operations of the DISCOMs. We are very hopeful that power sector is at a very, very critical juncture, and going forward, something better should happen. Wind segment continues to be facing headwinds because of the DISCOMs being poorer, and by every passing day are not paying money to the generators in time. It has impacted not only the tariff but also the payments in time. We hope to realize our pending payments of REC dues of the second tranche in this quarter, which is around 65 crores. We received 58 crores last year. Additionally, still REC trading continues to be in hold because of the APTEL order, and there is no trading happening since July 2020. We are hopeful that a fast track hearing will happen in APTEL, but unfortunately there is only one bench at the moment operating in APTEL, and second bench is yet to be reconstituted. As committed in the last quarter, we will be this year will be a stabilizing year, and we will be recovering our performance of last 2 years back, and we shall be executing at least 50% of the present unexecuted order book, and we will also see a good order intake during the year, which should be no less than 40 billion rupees. Again, to retreat, in summary, we see strong power sector reforms with focus on efficiency, stable and reliable power supply, the cost of power, and better financial health of the sector. The focus will continue on renewable power with related transmission infrastructure and green corridor, where we were the first movers in building green corridors in the country. The transmission infrastructure is required for about 500 gigawatts over next 10 years. Our thrust on overseas market is also doing better. We are hopeful of bagging better orders, but Afghanistan has become an area of concern due to recent developments. Data center is a huge growth area. COVID has impacted our life in multiple ways, but one positive outcome of this is a growth in the digital space. With the growth in digital space, data also backed by IT policy on data parking in India. It is expected that third-party data centers industry to grow significantly from the current level of 500 megawatt plus minus to 2 gigawatt in the next 3 years and up to 5 gigawatts by 2030. Till date, most of the data centers were located in Mumbai area, and now Chennai has become equally preferred hub after installation of undersea cable a year back. Airtel, Adani entity are already in process of setting up of data centers at Chennai. TECHNOE is also in advanced stage of setting up of a 30 megawatt IT node data centers of ultra scalable hyper-density category, for which the land has already been acquired, consultants appointed, and project is now will be shortly in construction phase. And additionally, as committed, we will also be able to consume our own wind power of 112 megawatt in Tamil Nadu, which will classify also this data center as carbon neutral. That aligns with the policy of many hyperscale customers because of ESG commitments. With capex of around 750 to 800 crores, of which around 60 to 65% will be electromechanical works, which is our in-house capability, and we will be able to leverage the expertise of executing such works. With this background, I put this meeting to the floor. If any one of you is desirous of knowing more, you are welcome.
Can we open for Q&A, sir?
Yeah, absolutely.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. This is a reminder to the participants. Anyone who wishes to ask a question may press star and one at this time. The first question is from the line of Ranjit Shivaram from ICICI Securities. Please go ahead.
Yeah, hi sir. Good morning.
Very good morning. Very good morning. Yeah, Shivaram. How are you keeping?
Yeah, good sir. Hope the same.
Thank you. Yeah, absolutely.
Sir, we have seen a tad reduction in the overall execution compared to last quarter and also, but the margins were better than expectation. And so how do we see the full year execution, and also if you can throw some more clarity on the order intake in 1Q, current order book, and what's the kind of order intake that we should be looking at for FY22 as a year?
You see, basically execution traction suffered because of the COVID again happening in April and May, and most of our projects were centric in the north and western region of the country, which both went through the cycle earlier than southern part of the country. Right? So we could work only no more than, I will say, 6 weeks in last quarter, basically. So that way, performance is not as much impacted as it was last year. But yes, the takeoff happened little late. Second quarter should show better operationally, number one. Number two, we are expecting at least EPC business should be around 12 million execution, which will be targeting. But last 2 quarters will be the key to this. Second quarter remaining normal if there is no third wave experienced in the market. But wind is doing better. We are hopeful of producing almost around 225 to 250 million units this year, out of which in the first quarter we produced 70 million. And as of today, we have already achieved 140 million. So that's a better achievement compared to only 120 million last year. I think data center is in good shape. It should progress faster. We want to commission it by December 22. So that operationally we are available to do. We are L1 in 400 crore worth packages which are due with power grid basically, which are now due in bidding in this month and beginning of September. We are hopeful to receive this business, this 400 crore converted into business. But definitely, I will say that the transmission market business is under pressure, both in terms of volumes as well as margins. But our experience in this sector is very happy. If somebody breaks even, we make 5%, as I said 3 years back. And if somebody aims 5%, we'll definitely make 10%. So definitely our cost control is better than others. We are flexible. And I'm hopeful of achieving more things. MGD is in full execution as far as Bokaro is concerned, and we want to complete it by March 22. So whatever backlog we have, we intend executing faster than earlier to achieve top line. But better we are focusing on intake of the business. We want 20 billion orders this year, which mainly comprise of 12 billion out of HGD and another around 4 billion, 4 to 5 billion from transmission business, and another 2 billion out of our data center. 2 to 3 billion. So I trust we are on good track. We have gone through challenging times, hold on to our merits, and we have good treasury income, and also we'll be making some income out of the marking of our Northeast package with the CLP. This year, overall bottom line should be good, even if top line remains a little better than last year. I would say maybe 10-15% more than last year.
Sir, during 4Q, we were looking at somewhere close to around 1,200 crore of EPC revenues in FY22. So, are we in line with that, or you see that given the pandemic impact, it can come down, or what is that?
No, I have to say we are still targeting 12 billion, sir, as I said in my speech also, as a top line.
Okay, that's still possible.
Yeah, absolutely. It is in process, and it should be, but main output will happen in quarter Q4, Q3. Those 2 quarters will be significantly different than first 2 quarters.
Okay, and sir, if we look at our data center EPC portion, who will be our major competitor in the data center EPC? Because we look at your data center not only as an asset business, but also as an entry into the data center EPC market. So currently, who are the major players out there, and how do you want to position yourself? What are the capabilities that we bring as a company, as an EPC contractor for data center, for a third party to give us their data center turnkey order to us?
See, historically, there have been 3 companies as a footprint, although market was niche only and very small. Mainly, I will say Sterling Wilson, L&T, and Tata Projects. They 3 have been catering to this market historically. Sterling Wilson is already struggling to survive. L&T also do not find much interest in this segment. Informally, I'm sharing with you, because they find other sectors more lucrative as a volume as well as growth, mainly hydrocarbon, airports and others, or buildings. And Tata Project also finds this segment to be too small. So for our size of company, and given the demand of the data center owners, we will be able to adapt to their needs better than many others because of our flexibility in approach to execution and timeline to execution. Because these are all foreign entities, and most of them will look on the timeline, and contracts are going to be very, very punishing if timelines are not adhered to, and quality norms also have to be maintained. So our basic forte that you are asked is the electromechanical always. Techno was very good in POP mechanical processes, always in generating plants, and similarly medium voltage and LED side or communication side, we have done number of projects. And similarly, power intake on transmission side, we are better placed than many others. So we see a good scope. Ankit, would you like to add something?
Yeah, as just to add on what you were saying, I think as you rightly pointed out, that the major turnkey players are Sterling Wilson, Tata Projects, and L&T. But the point is that not all data center projects come out as turnkey. Lately, the practice is also coming in where a data center operator wants to break up a data center into multiple packages. So in case there is package-wise bidding for a data center project, then competition landscape can always change. But on a turnkey basis, these were the three main players. And as you rightly mentioned, the challenges with Sterling Wilson or the enthusiasm of L&T to approach this business industry are a little different. Therefore, there is still a lot of vacuum in the industry for organized players like Techno Electric to participate. And it might take a little time for us to build a goodwill in the market, to build a brand in the market for us to be a priority vendor for data center industry. But I think we are on the track and should very soon see something convert for ourselves.
Yeah,
Okay, and the second part of my question was like, what do we bring on the table? Because it's all like bought out items which you assemble. So what is the value addition, or if I put it in different way, what is the entry barrier for a new player to come? Because it's largely bought out. So what do we as a contractor bring in the table for a data center EPC project?
You see, you yourself have said EPC, and bottom is only P. So what we bring on the table is E&C, sir. Integration, performance, and engineering, sensitive integration, construction. Techno is a zero product company, even in transmission also. But still we excel better than many multinationals when it comes to projects. So, you see, a solution company is a strength in itself, is a merit in itself. It's a very hardworking company, business, which involves proper engineering sensitivity in integrating bought outs, and a lot of field works integrally are involved in layouts, laying out the equipment, performances, subsect performance, as well as in integrated performance in terms of availability, reliability. Because ultimately a data center is nothing but a combination of fiber plus multi-layer power solution around it. So that is how it goes. Yes, bought out is a integral part of it, but services component is also no less than 40% in this, sir. It's a kind of a, whereas in transmission we find it is no more than 70-30 as a combination between bought out and services. So everybody wants a one-source solution now. That is why EPCs are a preferred mode of procurement than getting into buying that equipment and then handling the interface of each equipment to make it a performing plant.
Okay, sir, fine. I'll join the queue for further questions, and all the best.
Thank you.
Thank you. The next question is from the line of Charanjit Singh from DSP Mutual Fund. Please go ahead.
Yeah. Hello, sir. Good afternoon.
Yeah, good afternoon.
Thanks for the opportunity. So my first question is especially on the distribution capex. So you highlighted, there are various reforms which are being implemented by the government. So on the distribution side, what's the kind of opportunity, you look at? Is it only the smart metering or any other, further opportunities you are, looking at? And what will be the quantum of these opportunities as and when they pan out? That's my first question.
You see, we have been awaiting this type of amendment, which we are still not fully informed what this act is all about. But it is going to impact not distribution only, but the whole value chain in the business, right from generation to the last mile delivery and collection of the cash from the consumer. So that is more important to make a whole value chain healthy in operation. Now, coming specifically, if distribution is made de-licensed, earlier we used to talk segregation of carriage content within the licensed purview. But now the whole distribution is supposed to be de-licensed, like generation. So it will obviously means a very open access to the consumers, and definitely power will become a kind of a telecom product where everybody will bring in technology, solution, servicing the consumer, motivating the consumer to pay in time, and many more value-added services additionally, like telecom today. Voice is more than 25% of the revenue chain with any telecom. So will happen with power. Power networks will be put to multiple uses, maybe internet, maybe data sharing. So you will see a very different outlook, mindset, and very competent foreign and Indian players coming in. A lot of investment happening in the sector. It will become a sector like aviation or ports. So we need to see it through. Merely intent or act enacting does not make, but it makes the life begin. So more serious players will be a part of this business, where we believe we will be able to have a significant pie of the better business, quality business in this segment.
Okay. So the next question is on the FGD opportunity itself. One, if you can, help us understand in terms of where we are on the execution of the current orders in the FGD space, what we won. Secondly, in terms of the incremental opportunity and how you see the overall pricing trend in the FGD orders incrementally.
You see, pricing obviously has become affordable and reasonable with a very poor pricing start 4 years back, 3 years back. And second opportunity now will be more in private and SCBs at the state level. And norms of pricing has already been set by CA, more or less, which they are also upgrading with every passing year. So, pricing is competitive like any other sector, but is not that big a pressure, I would say. But definitely FGD is a process plant solution and is a challenging solution. So you need to be capable to make money in this business ultimately by better and timely performance.
And sir, in terms of execution of the
Mr. Singh?
Yeah, we have lost Mr. Singh, sir.
Mr. Singh, if you are able to hear us, please do respond. Seems like we lost the connection for the current participant. Before we move to the next question, a reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Tejas Patel from Minal Engineering Works. Please go ahead.
Yes, good afternoon. Thanks for the opportunity. Am I audible to you, sir?
Yeah, you are welcome, sir. We are able to hear you.
Yeah, good afternoon, sir. Thanks for the opportunity. My question is regarding that Material Results ICD, 100 crore ICD. So, can you give a brief that what's the current status of that ICD?
This matter was sub judice with NCLT, and we have won the case now. And it is in our favor. We are hopeful of recovery this month, sir. I'm sure performance management or owners of the company will not like to go through this process.
I think I'm not able to hear you, sir.
Yeah, can you hear me?
Yeah, now I can hear you. Loud and clear.
Yeah, what I am saying that this matter was sub judice for last more than 1 year with
Okay.
NCLT, and we have got a favorable order now last week. And we are hopeful of out of court settlement or recovery with the promoters, as they will not like to see resolution process to go forward. That's our takeaway, but we have to experience it. Anyway, either way, now matter is in our favor, I'd say, more than the corporate data.
Okay. So long story short.
We are hopeful of recovery in this quarter, sir.
Okay. And any particular time frame that you can give us, that in what time frame you can give us to recover this?
So that's what I'm sharing with you in this quarter, by September, say.
Okay.
Yeah.
And one more thing regarding the smart metering. I think in the last conversation we had, you had mentioned that there is one 9 lakh smart meter order that you are about to get from J&K. So is there any update regarding that?
Yeah, that tendering process is yet to start. Now there was a confusion on the meter specification on prepaid versus smart meter with prepaid feature. So I think lastly, a month back, CA has fixed this with the approval of MOP. And now REC should go ahead with the tendering activity for the balance 6 lakh meter in the state of J&K. We hope that order should be finalized by December. So we'd like to have it will be a 3-part tender of 2 lakh each. So we'd like to have one more part portion of it.
Okay. And one last question, if I may allow.
Yeah, please.
Yeah. That regarding EPC project, that you have mentioned that some strategic partner from either Singapore or Singapore was interested in your Bombay for Bombay plant. So is there any update regarding that?
No, there's no Bombay plant, sir. It is Chennai data center. What we are talking to various entities in the data center is we like to have a data center, experienced data center operator based in Singapore or Hong Kong or US to be our partner in India, which we are scouting. And many have interest. I think we should be able to complete this process by no later than December, as my mind goes. Until you will like something?
Yeah.
No, we are in discussion with multiple data center operators based out of US and Singapore both, and some are in advanced stages of discussion, and some have taken, some are in the prelim stage. But these discussions are healthy, positive, and they're ongoing. And as mentioned, we should have something on the table by December.
Okay. Thank you so much. That's it from my side. Thank you so much.
Thank you. The next question is from the line of Ritesh B. from Asian Markets. Please go ahead.
Yeah, hi. Good afternoon, everyone, and thanks for the opportunity. Sir, I have a couple of questions. So first, you given a guidance of 1,200 crores revenue and 2,000 crores of inflow guidance. So can you help us, or can you share some broad color which segment will contribute how much, how much from data center, FGD, substation, smart meter, right?
Yeah, I did cover in my presentation that we are L1 in 400 projects as of now, and we have already bagged business of about 75 crore in this quarter. And by and large, you can take FGD will give us a order book of 1,200 crores, 12 billion, and another 400-500 crore from transmission. Our own data center intake business should be around 500 crores. And additionally, metering business should give us a business of another 200 crores. So altogether, we are targeting 25 billion, but I'm sure we succeed in 20 billion plus only by the end of the year.
Okay, helpful, sir. Sir, secondly, can you give us some idea about the Kohima deal status and by when it can be complete?
I think it should be over by December, as we are saying earlier. We are targeting September. Because of the COVID, certain approvals could not happen in time. Now they are gradually falling in place. And CLP is also keen to wrap it up as fast as possible. So we trust December should be a fair guess to receive money from the buyers.
Okay, fair. Sir, the revenue guidance you talk about the 1,200 crores. So can you share some broad color about that? How much it will be from FGD, substation, data center types?
By and large, you can expect, say, about 600 crore from FGD, another 400 crore from transmission, and 200 crore from the metering business, distribution, by and large.
Oh. Okay.
That won't be part of this year's top line.
All right. Got it, sir. That's all from my side. Thank you, sir.
Thank you. Before we take the next question, a reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is a follow-up from the line of Ranjit Shivaram from ICICI Securities. Please go ahead.
Yeah, hi sir. Just touching upon this raw material cost inflation, we have seen that it has not impacted you as your peers. So what was that? What was the right thing that we did, and how do you see this going forward?
You see, basically these are already committed orders with the suppliers, and by virtue of our relationship of so many years, definitely they have honored the commitments without knowing the way this industry works. But the new orders which we have got last year, worth about 250 crores, they have impact of this commodity price rise. And we are talking to the ultimate customers with us with the IMA-PV. They are yet to be taken in execution, which will happen in third, fourth quarter of this year, because customers have yet not handed over the land to us. So that's a saving grace. Hopefully we will be empowered with the IMA-PV, otherwise it will have an impact of around 5% for that limited business.
Okay, and FGD, we have seen a lot of people impacted in terms of margins and working capital. So how has been our experience, and have we reached a threshold in terms of margin recognition for the FGD?
Yes and no both, because terms of payment are really difficult in FGD business, because more payment is skewed in favor of the terminal payments in this business. But we are at the peak of the execution at the moment, and customer is also keen to meet its capex obligations. So I will say that this has become more of a game of cash flow margin, cash flow operation than margin. By and large, as ordering has already happened, and construction drawings are already in place with a defined BOQ, so margins are intact, I can say that. And it will largely be cash flow driven business, more than the margin getting impacted. If somebody can maintain the cash flow, margin will not be impacted. But if cash flow, which is a forte of Techno by virtue of being a reasonably cash-rich company, so people have trust in Techno. I don't think cash flow should be a challenge to us to meet the obligations. That itself will contribute to the margin.
Okay. So you don't see any major risk to FGD impacting our cash flows?
Absolutely. So mainly the planning and programming. If we are able to retain our planning and programming strongly in place, there is no challenge. If time overrun happens, cost overrun will happen.
Okay. And overall, when we see the future orders from that will be largely from states and private. So is there any apprehension for us to go for a state ordering or stick on to private sector, given the balance sheets of most of these state entities are in a stretch level, payment crisis can happen. So how do we strategize ourselves for that future orders from FGD?
Sir, look, any segment you deal with has its own set of norms and challenges. So we have to adapt their culture to work around them. That is a flexibility Techno enjoys more than many other companies. When we serve a private sector, we become more of a private-centric. When we work with the state, we have tried to absorb their culture of decision-making. CSU, of course, have a very healthy and defined culture. So it is easy to adapt. They are more transparent. But other two segments are a bit of a opaque. But that is not a challenge for a company like us to stay fit and make some money more out of it. You see, it goes either way. Any opaque process, it helps you also and it can bite you also. So if you are flexible and you can think ahead of time, you are always better off. That is our posture.
And sir, lastly, this STATCOM related orders, we were very bullish 2 quarters before. We were expecting some orders happening from the STATCOM side. So what has transpired there, and how do you see, is there anything else, anything in terms of the order intake in the STATCOM segment?
No, sir, because STATCOM is largely a grid quality improvement solutions more than the capacity augmentation solutions. And now TBCB having become the norm of the industry by and large, not much is being thought on the STATCOM side, I will say at the moment. But down a year, I'm sure it is ultimately as the grid becomes more bigger, complex, and more networked, you cannot do without do away with STATCOM solutions either as an integral part of it. So at the moment it is not being envisaged, but I'm sure that down a year it will also be a mix of the solution.
And sir, lastly, we are hearing a lot of capex happening in the steel sector, and that requires a lot of opportunities in terms of substation. So, as a company, how geared up are we to address this? Do you really see something happening in the ground in the next 2 years in terms of inquiries?
Look, we have never been a part of steel sector. Culturally, we have found it more challenging than refineries or petrochemicals or other sectors. So I'm not sure whether Techno will be able to take benefit of this capex in steel sector. But definitely, if any capacity augmentation happens in non-ferrous metals like copper, aluminium, Techno will definitely be there.
Okay, sir. Thank you. All the best.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Amber Singhania from Asian Market Securities. Please go ahead.
Hi, sir. Just couple of questions from my side. One, we were talking about international space. So just wanted to know, sir, what is our pending execution still remains in Afghanistan? And given the current situation, do we see any risk or any stuck money there on that account, sir? Is there any significant portion lying there?
No, the project which we are doing in Afghanistan is ADB funded and fully LC backed, number one. And number two, but we are almost through with the project to the extent of 90%.
Okay.
But as even Taliban has said, they respect India's efforts in doing developmental works, and they will love to keep India as a part of development or progress in India. In Afghanistan, if India do not envisage any military action. So, but in our case, I will say that two things are strong. One is it's ADB funded and not funded by the local government funds. And second, it is LC backed. And we need to watch the situation. Ultimately, I am sure Afghanistan cannot be left unanswered like this, where it is today. Some government will happen, which is democratically elected, on blend of two, with Taliban, what US has said 6 months back. So I see more positivity coming out of this than negativity. Yes, nobody wants to go through the extreme solutions as has happened in Afghanistan. But I definitely see more positivity out of it than negativity. But it will take 2 to 6 months to come back to normalcy.
Okay. And any progress on Kenya order side, sir? Any update on that account?
Sir, due to COVID, they are also slowed down their works, but the only positivity, they have kept the agreement with Exim Bank alive and keep extending it at the moment. We are hopeful that it will go through because it is their need which cannot be denied. Question is, when do they come back as a normal come back to normal behavior post-COVID?
Mm-hmm. And lastly, sir, on the smart metering side, the project which we were executing in J&K and Ladakh, what is the number of meters we have completed? Because I believe after completing 50,000 meters, we will be qualifying to bid for ELSS tenders also. So are we reached that threshold, or by when we are expected to achieve that threshold, sir?
So 50,000 meter threshold we reached by December, sir. Okay. That level, but we were our other EPC experience in distribution business in J&K, not limited to your meter specific experience. Because definitely in many other distribution projects, we also install meters, not smart meters, but we do install electronic meters there also, which has many such features of a smart meter also. Those meters we must have installed by now no less than 1 million all over the country in last 10 years. But your question is valid that if somebody writes 50,000 smart meters, we'll be able to meet that norm only by December.
Okay. Fine, sir. That's all from my side. Thank you. Stephen?
Thank you. As there are no further questions, I now hand the conference over to Mr. Ambar Singhania for his closing remarks.
Thank you, Stephen. On behalf of Asian Market Securities, I would like to thank everyone for joining this call. Special thanks to the management for giving us the opportunity to host this call. With this, we can close this call. Sir, would you like to add any closing remarks?
Yeah, I would like to thank all the participants and each one of you for joining the conference call with us. In case you have any queries related to our performance or works, type of projects we do, please drop a mail to us, to our relationship manager, Mr. Vishal Jain. And with this, or if you happen to be in this part of India, please do drop in our office to see how we really work differently than many others. With this, I would like to close the conference and thank everybody once again for joining. Please be safe, stay safe, and have a COVID-friendly behavior to stay fit. Thank you very much.
Thank you. Ladies and gentlemen, on behalf of Asian Market Securities, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.